Welcome to Apart Market Dynamics from MPF Research. I'm Jay Parsons, and today we got not one, not two, not three, but 4 metros to plow through. We're talking about Upstate New York, Albany, Buffalo, Rochester, and Syracuse. And to get through all 4, I've called in reinforcements coming in all the way from 2 doors down from me, Greg Willett.
I'm not sure you actually need me to help you out on this one. Pulled out my calculator here. You add up the existing stock in these 4 metros, a little bit more than 200,000 units, so a tenth of the size of Metro New York.
Yeah, these are smaller markets, and they're also some of the nation's oldest markets. But that's not to say there are some things to like, particularly in the occupancy side. You could lump these 4 markets in with some larger places like Pittsburgh and Milwaukee, some older, more established markets that just haven't seen a lot of institutional grade new development over the past 30 years or so. And so that means there's just not much institutional grade product in these markets, and that means that there's little trouble staying full given the lack of competition. You're probably losing more properties to obsolescence than you're actually adding over the past 3 decades or so.
Limited growth in the stocks in these markets, that does help the occupancy numbers. The rent growth numbers, not so great overall for the most part. That tends to reflect that you've got, by and large, slow growth in the economies. That means limited household formation, limited wage growth. It's just hard to push rents in that sort of environment.
All right, Greg, so let's run through these 4 metros. I'm going to give you the first draft pick here.
Well, I'll say let's do them alphabetically. What that really means is that I want Albany because that's the more interesting story.
It is.
So we talked a little bit about struggling economies, but Albany does, to some degree, stand apart from the rest of these. Obviously, state capital, you've got some government employment there. And it's also a big education and healthcare center. And adding to that, you do have a growing tech sector in Albany. So some decent numbers on the employment story. Over the past year, Albany has added 9,100 jobs, 2.1% growth. So with that happening, the apartment sector numbers are looking pretty decent in Albany. We've got a chart for you here. Run through the basic stats. Occupancy is now at 97.9%. That's up 80 basis points on the quarter, 200 basis points year over year. That 97.9% in fact puts Albany in a 3-way tie with Madison, Wisconsin, and Long Island, New York for the second highest occupancy in the country, right behind the numbers in Pittsburgh. Rent growth has been decent in this marketplace. Effective rents for new leases climbed 1.4% during second quarter, 3.7% on an annual basis. One submarket highlight for you, it's the Saratoga County area leading the way on rent growth, pricing up 6.5% in that particular area.
Next up, Buffalo, only because it's next alphabetically. There's really not a lot separating these other 3 markets in terms of the economy or the apartment market. Buffalo has just not had nearly the same success that Albany has in reinventing itself over the past half century or so, though it has tried. It was once one of America's largest cities, but the population today is less than half of what it was in the 1930s. Manufacturing jobs have gone away, and there just hasn't been much to replace them. And the best you could say about the market of late is it just isn't losing jobs anymore. In the past year, Buffalo actually added 3,100 jobs, growth of a very modest 0.6%. But this is a market, like we talked about earlier, for the region overall that has probably lost far more apartments to teardowns over the past few decades than it has built. So that is why even here, apartment occupancy is healthy at 95.9%. That is down, however, 70 basis points in the quarter and 100 basis points year over year. And rents took a hit in 2Q, falling 2.6% just in the quarter. And that put Buffalo in a tie with Florida's Palm Bay, Melbourne, Titusville area for the nation's worst quarterly cut. And year over year, still some rent growth, but not very much, just 1.5%.
All right, next on the list then is going to be Rochester, and a lot of the things that you just said about Buffalo apply here as well. It's a place that's had a declining population trend really for 7+ decades. But of late, numbers not too bad, at least on the economic performance numbers, but you have to question whether that's sustainable. Sure. Looking at some of the specifics, about 10,000 jobs added during the course of the past year, a 1.9% growth rate. There was a recent article in the New York Times that talked about how some of the metros, traditionally big companies like Kodak, have faded off, but you've actually gotten some new companies that have come in there to replace them and retain some of the workforce. Still, I don't think that we're going to see 10,000 jobs created moving forward on a consistent basis. Looking at the apartment occupancy numbers, we're currently at 95.9%, down 40 basis points for the quarter, but up 40 basis points for the year. Effective rent growth, 1.4% in the quarter and 2.6% year over year.
All right, so 3 down, 1 to go. That leaves us with just Syracuse, the hometown of Thomas Cruise Mapother, also known as Tom Cruise, and also to Richard Gere, so 2 of everyone's favorite actors. But there's not a ton more to brag about here.
You really just don't have anything to say about this metro, do you?
I'm trying to make it interesting for you. Like these other spots we talked about, the industrial heyday is long gone. Population has trended downward for the past 60 years. And nowadays, the key cogs to the local economy are Syracuse University and also the Upstate University health system. And they have made the University Hill neighborhood one really trendy neighborhood that is certainly thriving in Syracuse, but there's not a whole lot more that is. Recent job stats show very little growth. 2,200 jobs added annually as of second quarter, an expansion rate of 0.7%. However, the apartment occupancy stats are very strong in Syracuse, and they traditionally are. As of 2Q, the rate came in at 97.2%, up 40 basis points quarter over quarter, though still down 80 basis points annually. Occupancy rates are tight across the metro area, but very little rent growth. Rents up just 0.4% in second quarter and 0.6% year over year. So we've gone through all 4. Greg, any closing thoughts here?
Well, I was told to throw in a reference to the Finger Lakes area, but I don't really know what that means, so I think I'll just leave it at that.
I think we pretty much covered it, so let's call it quits. So until next time, for Greg Willett for MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.